Imagine this. You're facing rising prices, a shaky job market, and unpredictable investments. How could anyone possibly grow their wealth in such a chaotic time? It might sound unrealistic, but Warren Buffett, one of the greatest financial minds in history, has done exactly that, and his methods can work for you too. This is not just about surviving. It's about thriving when the odds seem stacked against you. In this video, we will unlock Buffett's proven strategies to turn today's economic chaos into opportunities for financial growth. These aren't just tips, they're life-changing insights that you can start applying right now. Don't miss a second, because your journey to wealth begins here. Economic downturns can feel overwhelming. Inflation drains your purchasing power. Recessions threaten job stability, and volatile markets can make even seasoned investors nervous. Yet, Warren Buffett's principles show us that challenging times are often the best opportunities to create wealth. According to the Bureau of Labor Statistics, inflation in the United States has recently reached levels not seen in decades, leaving many households struggling to save. But here's the silver lining. Buffett's wisdom proves that financial growth is not only possible, but also achievable with the right mindset and strategies. Let's dive into how you can apply his timeless advice to your life. Number 1. Embrace a long-term mindset. Buffett famously said, "Someone's sitting in the shade today because someone planted a tree a long time ago." This quote is a powerful reminder of the value of thinking long-term, especially when short-term circumstances seem grim. During periods of inflation and recession, fear can lead to hasty decisions, such as panic selling investments. Buffett warns against this. Consider this. Investing in companies with strong fundamentals, businesses that provide essential goods and services like healthcare or utilities, is a proven way to weather economic storms. These companies have pricing power, meaning they can adjust prices to keep up with inflation without losing customers. For example, during the 2008 financial crisis, Buffett's investments in these resilient sectors yielded substantial returns. His long-term approach paid off as markets recovered. Take a close look at your investment portfolio. Are you prioritizing companies with a history of stability and growth? If not, consider shifting your focus to those that thrive in any economic climate. Number 2. Invest in yourself. Buffett often emphasizes, the best investment you can make is in yourself. This advice becomes even more critical during economic downturns. Inflation may devalue money, but the skills and knowledge you gain can increase your earning potential and financial security. Think back to the pandemic. Many people used this time to learn new skills online, enabling them to pivot careers or secure higher-paying jobs. Platforms like Coursera and LinkedIn Learning reported record enrollments as individuals sought to stay competitive in a shifting job market. Buffett's philosophy encourages us to view education and personal growth as essential tools for overcoming economic challenges. Set aside time each week to develop skills that align with market demand. Whether it's mastering data analysis, improving public speaking, or understanding personal finance, these investments in yourself will pay dividends. Number 3. Avoid debt like the plague. Debt is not necessarily bad, but Buffett advises that it's important to avoid debt during inflationary periods, when rising interest rates make borrowing more expensive. High-interest debt, such as credit card balances, can quickly spiral out of control, eating away at your financial stability. Here's a relatable example. Imagine carrying $10,000 in credit card debt at a 20% annual interest rate. That's $2,000 in interest every year. And with inflation, the purchasing power of your repayment dollars decreases over time. Buffett's approach prioritizes eliminating such debt to free up resources for saving and investing. Develop a plan to tackle high-interest debt. Start by focusing on the loans with the highest rates and avoid taking on new debt unless it's absolutely necessary. Number 4. Be fearful when others are greedy, and greedy when others are fearful. Buffett's contrarian philosophy has cemented his reputation as one of the greatest investors of all time. He believes that moments of widespread fear often create the best opportunities to acquire valuable assets at discounted prices. During the 2008 financial crisis, Buffett's investment in Goldman Sachs not only stabilized the firm, but also yielded impressive returns for his company, Berkshire Hathaway. This principle applies to individual investors too. When recessions hit, real estate prices and stock valuations often drop. While others panic sell, Buffett's strategy is to identify and purchase undervalued assets that are poised to recover and grow. Start building an opportunity fund today. Even modest, consistent contributions can position you to capitalize on undervalued assets during economic downturns. Number 5. Live below your means. Despite his immense wealth, Buffett is famously frugal. He still resides in the Omaha home he purchased in 1958 for $31,500. His commitment to living below his means highlights a critical lesson. Financial resilience often comes from disciplined spending, not just earning. Take a closer look at your own spending habits. Many Americans fall into the trap of lifestyle inflation, where increased earnings lead to higher expenses. Subscriptions, dining out, and luxury items may seem harmless individually, but collectively, they can drain your resources. Buffett's approach encourages cutting unnecessary costs to focus on savings and investments. Conduct a detailed audit of your monthly expenses. Identify at least 3 areas where you can cut back without significantly impacting your quality of life. Number 6. Cash is king, but not always. Buffett values having cash on hand for emergencies, but cautions against holding too much during inflationary periods. Cash loses value as inflation rises, so it's essential to strike the right balance. Buffett advises maintaining enough liquidity to cover unforeseen expenses while investing excess funds in assets that outpace inflation. Consider treasury bonds, which offer stability and are often a reliable hedge against inflation. Real estate and commodities like gold are other examples of assets that preserve value during economic uncertainty. Build an emergency fund with 3 to 6 months' worth of living expenses. Use additional cash to invest in inflation-resistant assets and grow your wealth. Warren Buffett's strategies prove that economic crises are not insurmountable obstacles. They are opportunities in disguise. By embracing a long-term mindset, investing in yourself, avoiding debt, seizing undervalued opportunities, living frugally, and maintaining the right balance of cash and investments, you can build lasting financial security. Remember, wealth building is a marathon, not a sprint. If these insights resonated with you, don't keep them to yourself. Like this video, subscribe to our channel, and share it with friends and family who could benefit from these strategies. And here's a question to ponder. Which of Buffett's principles will you start applying today? Let us know in the comments. Your financial future begins with the actions you take right now.